Coming up on Market to Market, Midwest businesses discount the fear over dropping NAFTA, and the war on a disease devastating the nation's citrus crop.
We'll be looking at ways to
those stories and market analysis with Dan Huber next.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, January 5 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. A positive outcome from recent natural disasters can be found in this month's jobs report. However, the number of positions created failed to meet expectations. The unemployment rate held steady at 4.1%, a 17-year low, as a modest 148,000 jobs were created, 50,000 fewer than expected. U.S. goods have become a little cheaper on the world market as the dollar index visits levels not seen since December of 2014. The trade deficit is reflecting the cheaper greenback as exports rose last month, even as the trade deficit increased to $50.5 billion. The easy flow of goods over international borders remains at the forefront for many U.S. farmers and ranchers as North American Free Trade Agreement negotiations enter round 6 later this month. Agriculture relies heavily on treaties like NAFTA to move their goods to foreign ports. However, there are those business owners who put less emphasis on whether or not NAFTA survives. Colleen Bradford Krantz has the details.
3/4 of central U.S. business managers surveyed by Midwestern University say leaving the North American Free Trade Agreement will have little or no impact on their companies. The results of the survey, conducted by Creighton University's Economic Forecasting Group, surprised its director, economics professor Ernie Goss, who quickly pointed out the importance of agricultural exports for most of the 9 Midwestern and Southern states where those surveyed live.
We asked them about what they saw as the big challenges looking ahead, and almost 50% said competition from abroad, which is sort of unusual. When we ask them about impacts from NAFTA, only about 22% saw negative impacts from abandoning NAFTA. Now, we economists, we're like, you abandon NAFTA, that's going to be big problems. Well, they don't think so, the businesses that we survey.
Among the 9 central states surveyed, Creighton said North Dakota has the most to lose, followed by Iowa and Missouri if the U.S. were to step away from NAFTA, as President Donald Trump has suggested. According to the federal government, U.S. goods exported to Mexico increased 455% between 1993, the year before NAFTA was signed, and 2016. U.S. exports to Canada increased 165% during the same time period. Mexico, however, saw the greatest gain in goods it exported to the U.S., growing 637% during that same time period. Canada saw exports to the U.S. increase 150%. However, none of these numbers account for gains that might have happened without a formal trade agreement in place. For Market to Market, I'm Colleen Bradford Krantz.
Winter gave notice that it was back from vacation this week. No one from the mountain states to the Atlantic coast was left unscathed. Even sunny Florida received a dusting of snow that froze everyday activities. This weather anomaly is only a recent setback for the Sunshine State, already under siege by a problem of a different sort. In a place where a day without orange juice is a day without sunshine, a plant disease is hitting producers where they live. Colleen Bradford Krantz has our cover story.
University of Florida entomologist Michael Rogers remembers the text message in 2005 that told him citrus greening had been detected in Florida, the first time the devastating plant disease also known as Huanglongbing or HLB, had been found in the United States.
That was a day that people probably remember very well because we've all known that was the worst disease worldwide of citrus. I remember sitting in a meeting and getting a text said, hey, you know, it's here, HLB. I'm like, really? Because we knew it was going to change how we did things.
And it did. In the intervening years, citrus greening has slashed productivity in all of Florida's primary citrus regions. And it's not just oranges that are affected. Grapefruit, tangerine, and other citrus trees are also damaged and ultimately killed by the bacterial disease, which is spread via the Asian citrus psyllid, a non-native insect measuring just 4 millimeters. The bacterium attacks the plant's vascular system, preventing the fruit from ripening and eventually killing the tree.
When we first got greening, back in 2005, but 2006, I think a lot of us were in a little bit of denial about being able to manage the pest and the disease, and things got pretty serious pretty fast. It's been pretty devastating.
As diseased groves were abandoned or torn up, the land dedicated to citrus production has declined 34% over the past decade, dropping to 410,700 acres by 2017. The U.S. Department of Agriculture says the current orange harvest, projected to yield 46 million 90-pound boxes, would be the smallest in the state since World War II. In the decade before the arrival of citrus greening, Florida orange growers typically produced more than 200 million boxes of the fruit annually. And Hurricane Irma's arrival in September worsened an already tough situation. The estimated value of all Florida citrus production has dropped 40%, from $1.8 billion in 2008 to $1 billion in 2017. And as citrus acres disappear, the number of jobs supported by the state's $8 billion citrus industry shrank. A study by the University of Florida estimated the state lost 31% of citrus-related jobs between 2013 and 2016.
In many cases, there aren't as many of those folks out there anymore because there's just not enough fruit to support those jobs. And so it can be very, very devastating to communities, especially in the growing regions of Florida, that depend on agriculture as an economic driving force for revenue.
Arcadia, Florida, a town of 7,600, is in the state's most productive citrus county, DeSoto, and has suffered from the spread of citrus greening. Mayor Judy Wirtz Strickland finds it difficult to watch the decline of an industry so central to the area's identity.
With fewer workers, they spend less money in the stores downtown, especially the grocery stores. Citrus has been a part of this community ever since I can remember, and I would hate to see it go away.
Many producers with smaller operations have had to give up, including some who were third or fourth generation orange or grapefruit growers. Chris Strickland of Alturas, Florida, had to knock down the orange grove he bought in 2015 from a neighbor. Strickland knew the 80-acre grove was infected, but had hoped to harvest parts of it for a few more years.
It was heart-wrenching to push this grove, but I also understood that the grove owners around me that have spent just tremendous amounts of money to save their groves were not being benefited by a dead grove that was actually harboring a disease that needed to be gone.
Strickland hopes to replant the grove once he feels more confident the trees won't get reinfected. He's hoping someone finds an answer sooner rather than later. The federal government has designated quarantine areas in 15 states and territories to help prevent the spread of both the Asian citrus psyllid and the plant disease itself. And where the disease has already progressed, it is providing money to help growers replant after they tear out a diseased grove. During the past 8 years, USDA has invested more than $400 million in a search for answers, much in the form of grants to scientists. But despite the efforts of more than 100 researchers, a cure has yet to be found.
There is some work that's ongoing looking at ways to maybe not reverse, but try to stabilize trees and keep them healthy and as healthy and productive as possible despite the fact that they're infected with the pathogen?
Those strategies include an approach where the trees are steamed to temporarily kill the bacteria, and another where trees are covered in an attempt to keep the insects out. Growers have also attempted to synchronize pesticide applications. Researchers are hunting for the genetic code that makes some citrus varieties resistant to the disease, though they are not good production trees, in hopes that they can introduce it in more useful varieties. Florida growers, who have largely focused on oranges used to make orange juice, are hoping for a similar find in a juice variety. Citrus greening has now been detected in all other major U.S. citrus-producing states. So far, the disease has been less widespread outside of Florida.
We've done a pretty good job here. We've quarantined that, and we've corralled it, as we like to say here in Texas. And so we've got it under control.
Other countries and states are watching Florida, hoping for an answer.
We haven't found the happy ending yet, but we're working as hard as we can to get there. We've got the firepower to continue the fight, and I think that we will eventually win. It's just how long folks will stick with us and how long folks can stick it out in these groves.
For Market to Market, I'm Colleen Bradford Krantz.
Next, the Market to Market Report.
Grain and oilseed contracts struggled to break free from the grasp of market bears. Large world inventories and lagging export numbers only added to the problem. For the week, March wheat gained 4 pennies, while the nearby corn contract was flat. A rumor USDA might reduce bean yields in next week's report, and La Nina weather patterns in South America pushed the soy complex higher as the March contract gained 9 cents. March meal rose 5.10 per ton. March cotton shed 62 cents per hundredweight. Over in the dairy parlor, February Class 3 milk futures soured 33 cents. Cattle peaked early in the holiday-shortened trading week. The February live cattle contract finished 2.30 lower, dropping limit down in the final session. Nearby feeders shed 4.02, and the February lean hog contract lost 35 cents. The U.S. dollar index slowed its tailspin, falling only 16 points. Crude oil continued its flight above $60 as the February contract flew $1.02 per barrel higher. COMEX gold poured on $13 per ounce, and the Goldman Sachs commodity index ticked almost 2 points higher to close at 443.70. Here now to lend us his insight on these and other trends is one of our regular market analysts, Dan Huber. And in case you want to go over things again, you can download or listen to our Market Analysis and Market Plus podcasts online anytime at iptv.org/MTOM. Dan Huber, welcome back.
Thanks very much. Great to be here.
Happy New Year to you.
Same to you.
This new year starts the same in wheat. We were talking about a winter kill. It was cold, but it's maybe now not so much the cold snap as it is the dry snap. Which one's winning out here in the market?
Well, you know, and I think you have to expand that view just a little bit, because there were some concerns about what's going on in Ukraine, Russia at this point. Not a lot of snow cover there, some cold temperatures diving in. You know, I would say it's a combination of both. I mean, with the very, very slack amount of moisture we've had, they did not get as good a growth as you would have liked to have seen in the winter wheat. And now with these excessively cold temperatures, it's, you know, granted, it's hard to think of a year where we don't try to kill the wheat crop 2 or 3 times during the winter. This year we seem to have a few more elements in place. And of course, when you're looking at what the lowest acreage in 100 years, you know, we don't have a lot of room to give up. But at the same token, I mean, the market's very complacent still about, you know, we've got big world inventories. Yeah, you know, we don't need to really worry about that all that bad. So, but again, I mean, there's the old adage is you never want to sell a quiet market, and I think we've kind of we've taken ourselves into complacency, thinking nothing can go wrong as well. So.
Well, we have major differences between Chicago, Kansas City, and Minneapolis. exchanges. Why?
You know, and again, protein quality from last year. You know, the hard wheat is, of course, has been a premium product to begin with. Doesn't really have the supply issues. But you know, that hard winter wheat is really the one that has the biggest concern there about the acreage as well as the growing conditions over the winter months here.
All right, let's talk about a strike. Where do we need to make a sale?
Oh, you know, and again, I guess I'm pretty complacent on everything at this point. Maybe that's a bad word to use, just saying that we've become too complacent about how the biggest supplies we have. But, you know, this is the time of the year we tend to find seasonal lows, work ourselves up into the spring as we start to think about what the risks are going to be of the growing season ahead. So, yeah, I think right now the name of the game is just kind of be patient, let the market come to us at this point.
Maybe if we can get 450 on that May contract, maybe a little higher. If we get to 450, time to...
Oh, yes. I mean, 450, 475 out
Okay.
into the July, then certainly you got to take on some protection. I mean, all of these markets are still bound within ranges, so you pick out the higher side of the range and you sell into it, certainly.
All right. Huber Report on Twitter is where you find Dan, and we also found a question for Dan on Twitter this week, and it came from Duncan in Williamstown, Ontario, Canada. So Phil's got competition now in Canada, but Duncan wants to know, where does one buy a defibrillator for the corn market? Hashtag flatline.
You know, the reality is we have the defibrillators there and ready to go. It's just nobody has plugged them in yet. You know, we have to find that surge that's going to actually get the juice back into the corn market. You know, unfortunately, at this point in time, it's going to have to be a weather problem. You know, the demand is solid. You know, it's not that we're not that we are setting any big records. We know export sales were pretty lousy for last week. That was Christmas week. But that said, boy, until we have a supply issue or we're threatening a crop, either South America or North America, boy, we're going to remain in this kind of steady sideways type of pattern we've already experienced.
Possibility that corn maybe goes up because oil is going up?
You know, that doesn't seem to carry quite the correlation it used to. I mean, it should in the respect that, you know, we continue to put out very solid numbers. I mean, maybe the most recent numbers on ethanol production were a little bit of a slack. But overall, I mean, that has been the continued bright spot in the corn market, you know, pushing 6 billion bushels a year on usage for ethanol production. But, you know, those are kind of known factors. We know that that's going to be stable. We know that's going to continue to provide that solid demand base. We need something new and fresh that could excite the buyer once again, or at least scare the bear.
Well, you're looking at stocks at 31-week lows on ethanol, and the lowest production, though, in 11 weeks. So quickly, before I let you go, time to make a sale in corn?
I don't believe so.
No,
I don't
hold?
believe so. Yeah, I would hang on to the corn at this point in time, yeah.
All right, let's talk soy. Any possibility this is a short-term rally, or is there longer legs to this?
You know, right at this point in time, I'm going to tend to stay with the short-term camp. You know, it's nice to see the bounce, but unless we can truly develop a situation with problems in Argentina, most specifically, you know, $10 is going to be a pretty tough lid to make beans get above at this point in time.
But if we would push up, how close to pushing up to 10 would you be looking to make a sale?
Oh, I mean, as far as how aggressive would I become?
Yeah.
Oh, I think I would, you know, particularly in old crop beans, I think I would be all over it.
You'd be moving.
$10 beans. It's back. You look at what China did here a few weeks ago with their grading changes. You know, those are generally things they do when they want to start trimming back on the volume coming into the country. So, you know, those kind of signs are going to be kind of hang over this market here for a little bit.
Well, there was a report that maybe there was a surge in world palm oil sales, and does that give reason for a little cover for selling?
Well, and palm oil has rebounded here in the last week, 10 days, which has helped lift the bean oil up as well. You know, that said, it's very difficult to sustain a bean market on oil alone. You know, you really need to see it happen in the meal. And now, and granted, the meal was probably the most impressive performer of the week when it came to the complex. But
510 on the week next week.
Exactly, and up over resistance, it's really held us for some time. So, but are we going to get carried away with the upside? And again, I think it all hinges on if we don't have a serious ongoing problem in Argentina, it's going to be tough to sustain these moves for extended periods.
I think I've asked you before, but how much stock do you put in weather reports for Brazil and Argentina right now?
Well, you know, theoretically, they have just as much weather information, or I should say the NASA or NOAA has as much information down there as they do domestically. So Are we getting the ground reports necessarily like we do in this country? That may be lacking a little bit, but we have so much good information coming out of satellite technology. So much of this has been based off of what's going on with La Nina that, I think we have good information coming out of there.
You can sit in Illinois and watch the weather in Brazil if you want.
Yes, you
so it's not as warm, though, in your office.
Well, true.
All right, let's talk about cotton. That's a market that there's some interest in this thing continually moving up. Are we still going up?
It really, the move in cotton really began a month ago. And, even then, it's probably, if you just go to the technical side, we've been overbought for the past month, but we just keep stretching in the higher highs each time. Critical this week that we were able to get up over the 79.30, 79.50 range. That said, I think we're probably to the point where we're squeezing the final bears out of this market. Once we get above 80 cents here, I think it's going to be a little bit difficult to keep sustaining the market. Particularly now, I think you're going to start hearing talk. Well, this is going to be a good market to start diverting acreage into if we're going to lose a few soybeans and. However we make that mix into the spring, but at this point you've actually given the incentive to start increasing that cotton acreage again, which ought to kind of put a cap on this.
So if you are on the fence with a little extra in your pocket or a little extra in the shed, is it time to sell some cotton?
Oh, I think I would. I think when you're north of 80 cents or at that 80 cent level, that has really been a tough level of resistance for years. Okay. So it's certainly. Yeah.
All right, livestock-wise, cattle came out of the chute real good on the 2nd, 3rd, sustained it, 4th, and today limit down. What's going on?
Yeah, let's look at the longer picture first. I think the cattle market looks pretty good as long as the economy continues to expand, continues to grow. We should see better consumption of beef out there, and I think that's really what moved us off the lows here a month ago. That said, there's no shortage of inventory. We've got plenty of cattle coming to the market here over the next 30 days, and I think that reality kind of caught up with us here at the end of the week.
Is this a race to the bottom?
Oh, I guess I wouldn't go that far. I think we could go through a slow sort of corrective wave here, but no, I think the longer term picture has turned a little positive here in the cattle market. So
don't panic yet.
Don't panic. In fact, with some, I think some speculators, we're probably going to be looking at buying some corrections and look a little more towards spring, summer before we get too aggressive on sales.
In the feeder market, we talked a little bit about the weather. There's still some feeders out in the field in some of that wheat country. It was cold this week. That's hard to put weight on. Is that what's helping this market?
I think that certainly helps it. You also don't have a lot of alternatives for usage. As far as low corn prices, stagnating corn prices are always a little bit supportive in the feeder market. And again, you look into the summer months, I think you can still put cattle on feed and make some money at it. So, certainly a supportive factor for that feeder trade.
It looked like there was one analysis that said the bears were on expansion. Do you find that to be true?
Bears on expansion?
They were bearish on expanding that herd.
Oh, sorry. Okay.
We're not feeding bears in the lot. That would be interesting.
There we go.
Just not what we want to do.
They do get bigger if you feed them. So, certainly. I think that yes, we are rebuilding the herds. We are seeing more cattle come back on to be it at the feeder level or into what we're trying to put in the feedlots. But you just don't make that happen overnight. It's still that's a long process. It's going to take a number of years to really grow back up. And here again too, if you look at last year, yes, we expanded hog production, we expanded pork production, but we still came back with higher price levels. And I think as long as we continue to expand the demand at a pace equivalent or better than what we're expanding the herds.
Right. It was almost a similar story the last 2 years in January.
Correct.
Yeah.
Correct.
All right. Hogs, you mentioned them a little bit. What's going on there? Off 35 on the week.
Yeah, off 35 on the week, but pretty insignificant about the rallies we've put in here recently. But I think the one big thing to keep in perspective on the hog markets, if you start looking at the Aprils, June, July, August, Octobers, any of them, where they have reached at this point in the rally, 83 to 87 cents, in the summer months. If you look back over the last 3 to 4 years, we have not taken those summer months any higher than that. So we're already at levels that have matched what has been the best trades or the best highs for the last 2 to 3 years. Probably a nice time to go ahead and take advantage of it. So here again, too, demand's going to be the name of the game. But
right. Did you have pork at Christmas, or did you have something else?
We did have pork.
Yeah, so you're helping.
We had, in fact, had it New Year's as well. So yes.
But that chart, if you look at that chart, I mean, it's holding. I mean, this was a good 2 weeks of holding, despite
certainly.
the volatility that had been there the last 2 weeks.
Again, one of the deceptive things when you look at the hog chart, though, is we come away from these lows. We just look at that spot market. We come off that extreme, what looked like an extreme October low into the December, now into the April. But you would say, well, geez, we don't have any resistance until we get into the 85-cent range. Well, go to that June contract. We're at that 85-cent range. So all we have to do is stay where we are, and we're already up against major resistance.
This is a yes or no. Is the dollar done diving?
I believe no.
Oh, lower. Okay. Dan Huber, thank you so very much for your analysis. Good to have you here.
You're welcome. Thank you very much.
That will do it for the broadcast portion of Market to Market. However, we will keep the conversation going, including answering more of your questions during Market Plus, available in podcast and video form on our website. We know rural America is full of great moments and photos. We publish some of the best images we have taken and share them on our Instagram page. Give us a follow at IPTV Market, and be sure to check out the frequently updated stories section. Might find some birds flying. That's what I heard this week. Join us again next week when we'll explore a lucrative export commodity rooted in the upper Midwest. So until then, thanks for watching. I am Paul Yeager. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.